We're starting with an economy that already has an inflation problem, so we're seeing interest rates going up, whereas during COVID we were cutting interest rates. If the supply side shock turns into a big drop off in demand and we start seriously throwing around the R word, recession, then maybe the conversation changes and we might be talking about rate cuts at some point in the future.
Hi Ben. We saw an intraday correction on the ASX 200 before markets recovered some of their losses, but could the markets have a lot further to fall if the US president decides to follow through on his threat to obliterate Iran's power plants if the Strait of Hormuz isn't reopened soon?
Yeah, well, certainly anything's possible. I think markets, to borrow a phrase from the RBA governor, have been remarkably sanguine about this situation. So the falls that we've seen in equity markets, while they have been substantial, they're not really into correction territory in a big way just yet. And given the risk that we're seeing geopolitically, not just in the oil complex, but also what's going on in bonds now, and how we're poised to maybe see things getting dramatically worse in a short period of time, it is a little bit surprising that equity markets maybe haven't fallen further.
Ben, there are reports coming out of Singapore that suppliers are beginning to ration fuel. Have you seen these reports and verified any of this information?
Yeah, we've started to see a few murmurs in the markets about shortages in Singapore. So Singapore is important as a bunkering hub for global shipping. So it's a major refueling terminal for cargo ships. And when you don't have any crude oil coming into the refineries in Asia, or dramatically less than what you previously had, and you have refineries cutting refining runs or shutting down completely in some cases, then there's going to be less bunker fuel produced for those ships. So suddenly we're starting to hear some rumours that there might be some shortages of shipping fuel.
There was a joint statement from the Australian and Singaporean Prime Ministers today saying that they will accelerate negotiations on trade in essential supplies, including fuel. How dependent is Australia on Singapore for such supplies?
Yeah, very dependent. So for our refined fuel imports, we bring in about 80 to 90% of our requirements through imports. Singapore is a major supplier. The largest, depending on which type of fuel you're looking at. So they're also an ally. The advantage that Australia has here is that we have long-term contracts in place with Singapore, and we have an alignment on values. So I suspect that the Prime Minister of Singapore is probably wanting to look after those relationships with Australia, and that's a good thing.
Do you expect that we are going to see fuel rationing within Australia within a number of weeks?
Well, it's certainly a possibility. I mean, we're starting to have this conversation nationally. The Energy Minister, he has said over the weekend that it's not something that's being contemplated in the short term. There does seem to be sufficient supply at the moment, but the longer this goes on, if we don't see more crude oil coming into those Asian refineries and we've lost 15 million barrels a day, something has to happen on the demand side, otherwise there will be shortages globally. So if we are more exposed than other regions of the world, it stands to reason that some sort of demand side, mitigation is probably in the frame.
And so finally, to sum up, in economic terms, how similar will the fallout from this incident and what we know now, how similar will it be to what we experienced during COVID?
Yeah, I guess there are probably some similarities. What we're watching at the moment is a big supply side shock to the economy. This time it's an oil shock, whereas last time it was basically the enforced closing down of global trade and production. So there will be some differences. We think that this time around we're going to see these pressures on the petrochemicals complex really reverberating through supply chains for a period of time. This time around, we're starting with an economy that already has an inflation problem, so we're seeing interest rates going up, whereas during COVID we were cutting interest rates. If the supply side shock turns into a big drop-off in demand and we start seriously throwing around the R word, recession, then maybe the conversation changes and we might be talking about rate cuts at some point in the future.
Ben Picton, thank you.
Thank you.